morning, viewers, and welcome to Market Insights. I am Lovina Emah, and it's a beautiful day in the city of Lagos, reporting live from Souk News Television. This morning, we will discuss Nigeria's economy, specifically the International Monetary Fund's growth projection for 2025. Now, you might be thinking, why should I care about the IMF and their predictions? Well, let me break it down. The International Monetary Fund is like a global economic watchdog. They keep a close eye on countries' economies, and their projections can influence investor confidence, currency exchange rates, and even government policies. So what's the IMF saying about Nigeria in 2025? Well, they have released their latest forecast, and it's a mixed bag. The International Monetary Fund has projected that Nigeria's economy is to expand by 3.2% in the coming year, which is next year, while inflation is estimated to drop to 25% in the same year. The fund, in its recently published World Economic Outlook, WEO, projected a global economic growth in 2025 to remain unchanged at 3.2% from 2024. So according to the IMF, GDP growth in 2024 will stay at 2.9%, a downgrade compared to its projection in July of this year. Well, you also know that Nigeria's economy is in the first and second quarter of the year, that's this year, grew by 2.98% and 3.19% respectively, amid a surge in inflation and a further depreciation of the naira. So what does all this mean to the average Nigerian? Well, a growing economy can lead to more job opportunities, increased income, improved standard of living, and amongst other great things for our citizens. However, it is important to remember that these benefits are not guaranteed. The challenges facing our economy need to be addressed to ensure that the growth projection becomes a reality. So we'll explore these challenges in more detail and also the potential solutions. Furthermore, we'll also hear from an expert who can provide their insights into the Nigerian economy as a whole and also the future prospects of this economy. So join us after the break for this informative discussion. Welcome back, and thank you for watching today's episode of Market Insights. But before we get right into our discussion of the IMF's projection of Nigeria's economy, let's look at how the Nigerian exchange has fared. So we're going to look at trading activities for Thursday, 24th October 2024. So at the end of yesterday's trading session at the Nigerian Stock Exchange, a total of 400 million shares in 9,211 deals corresponding to a market value of 15,715,799,000 were traded, compared with the previous NGX trading day, that's from Wednesday, October 23rd. Now yesterday, the data shows 41% improvement in volume, 90% improvement in turnover, and 16% in improvement deals. The current market capitalization of the stock exchange is at 60.1 trillion naira. In the aggregate, that's 122 NGX listed equities participated in trading, ending with 28 gainers and 19 losers. Access Holding led the gainers with 9.95% share price appreciation, closing at 22.10 per share, followed by Academy Press at 9.79%, UPDC at 8.9%, and Cornerstone Insurance Company at 7.6%. On the losing side, Royal Exchange came out last with an end-of-day depreciation at 9.72%, and 0.65 naira per share, followed by the International Breweries at 6.24%, Livestock Feeds at 6.06%, and Wapik Insurance at 5.94%. United Bank for Africa recorded the highest volume of 58.4 million traded shares, followed by J. Paul Gold and Ventures at 35.1 million, and Custodian and Allied Insurance at 33.7 million, and Access Holding at 30.4 million. Regarding the performance of the NGX market indices, the benchmark for the all-share index climbed to 245.53 points, that's 0.25%, to close at 99,189, a one-week gain of 1.13% and a four-week gain of 0.2%, and an overall year-to-date gain of 32.65%. Other remarkable indices that topped were the NGX top 30 index at 0.36%, amongst others. So that's our reports for the Nigerian exchange for this week that just ended today. But we can't talk about Friday because trading activities are still taking place at the Nigerian exchange. So now let's get into today's discussion. We're looking at the IMF's projection of our economy, everything they have said. And to have this discussion with us, we'll be joined, our guest who is joining us virtually, and his name is Dr. Samson G. Simon. He's the Chief Economist at ARKK Economics Data Limited. So thank you so much for joining us this morning on Market Insights, Dr. Samson.
Thank you for having me. Good morning, viewers.
Good morning to you too, and it's great to have you on the program this morning as we talk about the IMF's projection and what it means for our economy. Now, they projected, but before we get right into it, what does this entire thing now? It's all about the growth of our economy, despite all the challenges that we have been facing. In spite of all this, we still believe that this economy will grow. Now, the IMF has projected a 3.2% projection for Nigeria's economy by 2025. So do you agree with their projections? What are your thoughts on this?
Well, the IMF has been projecting growth data for Nigeria for a while, and their projections have largely been on target. And I don't see why this would be an exception. Of course, these are estimates, meaning that there are no exact figures, and they are contingent on some observed variables. And should these variables change for one reason or the other, then the projections might change. Just like we're seeing in this year, they initially projected 3.3, they reviewed it downward to 3.1, and then finally to 2.9. And they gave reasons for the downward reviews. Because whatever conclusion you're drawing is based on a premise. And should that premise change, then there's nothing to be embarrassed about changing the conclusion that you have drawn before. And for our 3.2 GDP growth for next year, 2025, for Nigeria, is also the global growth. So Nigeria is punching at the global level in the sense that we are performing in a region that on the average for the global economy. But when you compare us, when you juxtapose our performance with our peers on the African continent, we tend to be punching below our weight. And there's a need to stimulate this economic growth for Nigeria, because we're a country of more than 200 million people, and our inflation is growing quickly. So there is a need for us to stimulate growth as much as possible so that this population can be taken care of the way they deserve.
Okay, now you mentioned there's a need for us to stimulate growth. So what can we do as the country? What would you advise our government to do to stimulate growth in our economy?
The primary problem, we have a lot of structural rigidities. We have a lot of structural challenges within the Nigerian economy. And as long as we don't change this, as long as we don't fix that, then our economic problems may likely persist. And even this subsidy removal, or at least the attempt at subsidy removal, as for fuel subsidy, and even for electricity, and even the floating of the Naira, these are all attempts to fix this problem. Sadly, I know they may not have given the desired results, in the sense that we're experiencing the worst cost of living crisis that Nigerians have experienced in a lifetime. So it is not really good, I know, but maybe the way we went about it, we should have made proper provisions to cushion all these effects. But these are some of the things we need to do, because the Nigerian economy for the last 10 or so years has largely been stagnant, or in fact, even retrogressed. We know the size of our GDP this year. We know the size it was last year. We know what it was in 2022. So things are not actually leaking up. And there's a need for us to ensure that we change the structure of the Nigerian economy. Our dependence on oil has proven to be an albatross around our neck. And there's a need for us to find alternative foreign exchange earners, because foreign exchange earning has been a challenge for us. By the way, oil and gas is responsible for almost 100% of our merchandise export. So this is not sustainable. There's a need to stimulate other aspects of exports, but more especially non-oil export. And this can be done because our MSMEs are punching below their weight too. How are they punching below their weight? They contribute almost 50% to GDP, but their contribution to export is in single digit. If you compare that with China, where the MSMEs their contribution to export is more than their contribution to GDP. That means there's a problem. We need to encourage, we need to provide credit schemes, we need to provide avenues for these MSMEs to be able to export. But the larger problem is that we don't even produce some of these items enough for domestic consumption, let alone for export. So there is a need to work on the stimulation of production. And how do you stimulate production? Make Nigeria the easiest place to do business. Thankfully, Dr. Oluwale was appointed as the Minister of Trade and Investment. She worked on PEPEC to ease doing business in Nigeria. I think that's very important for us. If we succeed at that, that will stimulate growth, that will stimulate export, but it goes beyond the rhetoric. And it's not just, it goes without saying that talk is cheap. So we need action, we need results.
That's a very true sentence, that we definitely need action and we need to see results. We can't be talking all the time. Now, looking at what the IMF projected, now, do you think the International Monetary Fund understands the peculiarities of this country with by projecting a growth rate of 3.7% in 2025?
The IMF has a lot of authorities. They have a lot of big wigs on the economy, but I think there is a need for them to work alongside local experts. I mean Nigerian experts that are based in Nigeria, that are part of the Nigerian economy. They really understand all the nuances of the Nigerian economy. And some of their recommendations, some of their neoliberal economic recommendations might not actually be suitable for us. And that's why Nigerians are complaining of pains. The cost of living is just unbearable. Even for people that are gainfully employed, they're struggling, let alone for the masses of people that hardly even have anything. So I think while we want to free up resources to provide better education, better healthcare, infrastructure, and so on, there's a need also to give this a human face. And sadly, some of these recommendations do not have a human face, because the way Nigerians, the entire country, the entire population is thrown under the bus, that doesn't augur well. So there's a need for them to really be on ground. They might have been on ground, but they need to do it even more. They need to really understand, they need to have a deeper situation, instead of just assuming that one size fits all recommendations will always work for economists in Nigeria. We all have our uniqueness, and all this uniqueness should be captured into the model, and there should be considerations for such. If not, then at the end of the day, you punish Nigerians for nothing, you inflict maximum pains on the citizens, and then the rewards are not commensurate, like what they're saying about this subsidy removal and the floating of the naira. I know there are some good sides, and they're expecting more or even better results subsequently. But in reality, if you look at the cost by far outweighs the benefits. So it's a Pyrrhic victory. There is not victory that you should. You have inflicted so much pains on Nigerians, and what's the benefit? Next to nothing, at least compared to the pains.
Yeah. Well, looking at the policies the government is rolling out, I believe we are optimistic that definitely there will be some improvements. But before we start talking about that, let's speak about inflation now. The IMF expects inflation to decline to 25% next year, and regarding maybe between the first quarter to the fourth quarter. But given our current economic climate with the macroeconomic shocks, do you see 25% as a practicable figure?
Well, I think 25% is doable. We're doing 32.7 now. And as we go, if some of these policies, whether it's around the removal of fuel subsidy or electricity consumption subsidy, or even the floating of the naira, we're hopeful that their impact will soon abate. And when they abate, then there's a chance that inflation would likely come down. But one thing we fail to understand is that food inflation has been the major challenge. And I think next to nothing has been done about agriculture. We have not fixed agriculture. I think that's something we tend to forget, or the IMF might not have priced that in. Well, there's a lot that needs to be done, because if you look at the headline inflation, it's fueled mainly by food inflation. And what exactly, I'm not saying that we have not done anything, but if we are going to be frank, nothing that has been done that actually moves the needle to fix agriculture. So for the other components, things will get better eventually by next year, unless another shock comes along. But for the food aspect, which is the major challenge, what have you activity around the food sector or insecurity around it? So a lot of work needs to go into this. It's not just by fiat that you declare that inflation will come down from 30-something% headline inflation now, 32.7, and then by 2025, which is next year, it will be 25%. So there's a lot of work that needs to be put into that. And I believe the central bank looked at the trajectory, and that's a projection they're making. But shocks can happen, and this might likely be disrupted. But I think what the authorities should do is to pleasantly surprise us and even outperform what the IMF might have projected.
Okay, yes, I think that's very key. Definitely, we need to, or our leaders here need to outperform what the IMF has projected. Now, looking at the peculiarities of Nigeria and all the challenges which you have mentioned now, you know, these international organizations recommend adopting tighter monetary policies. So do you think adopting a tighter monetary policy will stabilize our country's economy?
Well, in monetary economics, the father of monetary economics, Milton Friedman, has his quote, and I'm going to state it. It states that inflation always and everywhere is a monetary phenomenon, in the sense that it is produced only, can be produced only by more rapid increase in the quantity of money than in output. And if you look at it, the tight monetary policy that the current central bank has embarked upon has really not reduced the money supply. So there's a disconnect somewhere. Normally, when you hike interest rates in normative economics, normally when you hike interest rates, money supply should reduce. I know there is a lack. When you hike, it may not immediately give you the results, but we have been hiking for a while. But what we're seeing, instead of money supply to reduce, we're seeing unprecedented levels of money supply. So there's a disconnect somewhere. And I think one of the reasons for that is because the fiscal authorities and the monetary authorities are not working in consonance. They're working at cross purposes. So you cannot be having an expansionary fiscal policy while you're embarking on contractionary monetary policy. You have to work in tandem. So I think that's a key factor. The fiscal side should make the monetary side outweigh if we really need to see results. So just hiking interest rates alone so far has not given us the desired results. I know some people say, all right, our inflation is non-monetary in nature, but the fact still remains that inflation is always a monetary phenomenon. So it's largely a monetary phenomenon. Other factors may exacerbate it, yes. And the evidence is there that the money supply keeps increasing. So that's to tell you that there's a problem somewhere, there's a disconnect somewhere. And the monetary authorities need to go back to the drawing board and find out where this disconnect is. Because when you're hiking interest rates for this long, and then you're not seeing results in terms of money supply and ultimately inflation, there's a problem somewhere.
Okay, that's very true. So putting this two side by side, do you think our government needs to work on both the fiscal policy and monetary policy just to ensure that there is some form of development going on in our country in addition to helping businesses that also want to grow?
Can you repeat that, please?
Yeah. Can you hear me?
I can hear you. Can you repeat the question?
I said, yes, like I understand everything you have said now, but I said, do you agree that it has to work side by side, improving on our physical infrastructure and also the monetary policy? Now, if they keep increasing our monetary policy, the interest rates, it will keep affecting businesses. And if the proper infrastructure is not put on ground, it doesn't help people also. So do you think these two have to be working side by side to be able to help production in our economy?
Of course, they have to work side by side. It's necessary for them to work side by side for us to see tangible results. But the thing is that the monetary authorities are not just doing consumers or households a favor by hiking interest rates to protect their purchasing power, but they're also protecting the purchasing power of businesses. I know some businesses will feel like, all right, it makes hiking interest rates makes the cost of credit to go through the roof, and then you cannot afford to borrow, or even if you borrow, you struggle to pay. So you cannot expand, and even infrastructure-wise cannot be quickly developed because of the cost of credit. But by protecting purchasing power, by trying to fight inflation, the central bank is doing all of us a favor, because when there's even too much inflation, that undercuts growth. So there's a need to tackle inflation. And I know it's a trade-off, because you have to choose between keeping inflation on target and easy money. That means cheaper money where the cost of the interest rate is lower. And for any central bank anywhere in the world, if you have to choose between hiking interest rates and making cost of credit dear, and then reducing interest rates so that there will be affordable credit for businesses and for infrastructure, they'll always choose the former. You tackle inflation first, bring inflation to target, then after you have done that, you can then stimulate economic growth by cutting interest rates and providing easy money for businesses and for government. So it's very important. I know all of them are important, but at this particular time, the overarching goal should be tackling inflation. And hiking interest rates it has been proven over time that is the best way. I know it might not be yielding the results now, and you're making cost of credit quite exorbitant, while the hiking that should reduce money supply and ultimately inflation might not seem to be working. So, like I mentioned earlier on, the central bank needs to find out why this is not working, and they need to fix that. But saying that there should be easy money for businesses to expand and for infrastructure for government, because government also borrows. And when interest rates are lower, it's more affordable for the government to borrow. But the priority now should be tackling inflation.
Yes, priority is tackling inflation right now. Okay, let me ask you this question now. Headline and food inflation are the main drivers that are essential to the well-being of our population now. So are we going to see the prices of these essentials come down with these projections from the IMF in order to alleviate the burden on the common man?
Well, when inflation is down, then of course, it means the prices of different items, because inflation is about the overall economy. It's not limited to a particular commodity, a particular service. It's for the entire economy. That's an average for all the items within the economy, whether goods, tangibles, or services which are non-tangible. So when inflation is decelerating, right? And it's coming down, and we're expecting it to come to as low as 25% headline inflation from the current level of 32.7. Of course, prices will come down. Whether it's around food or the core components of inflation, everything. I'm not saying that all the items will crash in prices or they'll come down in prices, but majority of them will see. And mind you, when you're talking about 25% inflation, it's not like deflation. It's not like prices will crash. It's just that the growth now in inflation is not going to be as fast as we're seeing so far. In the sense that now we're talking about 32.7 year on year. That means compared to the prices last year, the increase now will be 32.7 this year. So by next year, we're talking about 25. That means compared to prices this year, is now will be around 25% increase, like of in 2025 compared to 2024. So the best effects might also play a role because we are coming from high inflationary environment. So if you have a inflation decelerating, the impact will largely be seen some more. So that's basically it. It's not like we suddenly see prices crash to the levels that we saw a few years ago. No, it's just that the rate at which they increase will be slower than this year from the projection of the IMF.
Okay, let's take a break now. When we return, we're still going to discuss with Dr. Samson G. Simon about the IMF projections and what it means for our economy. So join us after the break. Welcome back, and thank you for watching the program as we discuss Nigeria's economic outlook and the IMF's projection growth for 2025. And to have this discussion with us is our guest who joined us virtually in the person of Dr. Samson G. Simon. He is the Chief Economist at ARKK Economics and Data Limited. He's also a member of the Royal Economic Society and a member of Nigeria Economic Society and the American Economic Association. So thank you so much for joining us this morning, Dr. Samson. Okay, so still on our discussion now, you mentioned a whole lot about the fiscal policy challenges that we have been plagued with in the country now. So with regards to revenue generation, much has been said about it, but in your view, how do we get it right with the fiscal policy and revenue generation within a short term? How do we get it right?
Well, I think the president is determined to fix that problem, at least by setting up the Taiwo Oyedele-led Fiscal Policy and Tax Reform Committee. They have submitted their report, and they have a lot of modalities how they intend to go about fixing Nigeria's revenue problem. Nigeria has one of the worst revenue to GDP ratios in the world, something in the region of 10%. Even our West African peers, even in West Africa, we are one of the least performing countries, and across the African continent too. So we're not doing well when it comes to revenue generation. So, and everything must be done to fix that problem. But like we like to say in Nigeria, you don't want to tax poverty. So you have to look at the correct items to tax, whether it's tax evasion that should be reduced, or even avoidance that you want to reduce. So there are a lot of ways that you can increase the tax revenue. And I think this committee has some good recommendations. And they need to, while you're taxing, you have to be careful that they don't tax businesses into non-existence. So you have to be watchful about that. And even for individuals, particularly around food, we know food inflation is completely out of this world. So there's a need to reduce the taxation of food, right? Even for items that were taxed before. And I think the committee recommended that too. So there are a lot of ways that the tax revenue can be increased. And another thing is when there is growth within the economy, when there is economic expansion, there'll be more tax revenue. So all these things are on the table and the authorities are working towards them. And we look forward to seeing better results, particularly from next year when some of these new laws are going to come into effect.
Okay, we look forward to that. Now, we cannot overlook the external factors in all of this. We don't have any control of external factors like the global economic slowdown, the global oil price volatility. And so in the midst of all this, now, how do we stay ahead of the curve as far as these factors are concerned to mitigate the impact of all these problems, which is inevitable in most cases?
Well, shocks are a natural part of the global economy. So we cannot run away from them completely, but we can mitigate the impact. We can reduce the impact to the barest minimum. When Nigeria has economic challenges, America doesn't normally feel it.
Okay, there seems to be a hitch with Dr. Samson's network, but he'll join us shortly once it's fixed. Now, he did mention a lot of very important points as to how we can help to also mitigate this crisis we are facing in our economy and prove the IMF wrong. And our government needs to be on deck. All hands need to be on deck to be able to achieve this. And with specific emphasis, like our guest said, on improving our fiscal policy, our infrastructure in the country, before we start talking about improving or increasing the monetary policy that we have right now. Yes, we want to tax businesses and generate revenue, but we also need to make sure that the proper infrastructure is on ground to make sure that these businesses can produce or function properly, according to our guest. Now, Dr. Samson, are you here with us now? Okay, he will be joining us shortly. He did mention a lot of points in the midst of all this. Okay, Dr. Samson, are you here with us now?
Yeah, I'm here with you.
Okay, good to have you with us. So I mentioned yes, we were going to talk about, I mentioned things like the global economic slowdown, the oil price volatility, which could also have negative impacts on our economy, and we don't have control over these things. So how can we mitigate these challenges so that it doesn't affect our economy?
So we make ourselves as less susceptible to happenings around the world as possible, particularly negative happenings around the world. For example, for our crude oil supply, for our supply of refined fuel to domestic market, if we can ensure domestic refining, we ensure domestic supply of feedstock to these domestic refineries. We have technically removed the Nigerian market from the foreign exchange risks, from the volatilities that we see in oil prices, particularly if we price the crude oil in naira. So there are a lot of strategies that can be adopted, but we cannot be completely immune from happenings around the world because we are an integrated economy. We're integrated to the global economy. We're not an autarky. We're not like North Korea, where we hardly interact with the world. So no matter what happens across the globe is going to have some impact on us. But what the best we can do is to make sure that, particularly for the negative impact, is being brought down to the barest minimum. And then for the positive happenings, we welcome them and we embrace them with open arms. For example, AI and other spillover effects of the knowledge economy. That will boost our economy, that will make us better. So we embrace the good sides of being integrated to the global economy and try to mitigate the impacts of the negatives that come from around the world.
Okay, now looking at everything that you've said so far, we've talked about some solutions to these issues, like you have also mentioned. But, you know, there has been the issue of our federal government taking loans from these international organizations to help our economy now. And we know that we are owing, there's also the debt challenge too that is also affecting our economy. But looking at our country's everything that has been going on so far now, these loans that we keep taking now, are these loans for production or for consumption? Because when you take a loan, you have to be using it for something. And so far, I want to get your thoughts on this situation.
All right, I think we have a problem in Nigeria. We tend to demonize consumption, we tend to demonize imports. Import is as important as export. And that's why the objective in economics is balance of payment equilibrium. That means import equalizing export. So import is important. And in the same manner, consumption is as important as production. If you look at the GDP, You talk about consumption, then you talk about government spending, you talk about investment, which you consider as part of production, and then net export. So I understand maybe the concerns will be if you borrow to consume, there is no way your borrowings can pay for themselves, which is perfectly understandable. So if you're borrowing, you should borrow in such a way that these borrowings are invested in good investments that can pay back the principal, pay back the interest, and even have something more at the end of the day. That's very important, because if you don't do it like that, then you may find yourself in a state of unsustainable debt overhang. And it's very important for us to borrow strictly for these reasons. Sadly, we have to borrow sometimes for consumption, and there's nothing wrong about that. As long as we use this efficiently, there's no wastage, there's no corruption. We're talking about the cost of living crisis that Nigerians are suffering today. And some of us have never experienced anything like that. For older people, maybe in recent times, they have never seen anything like that. So there's nothing wrong if you provide social safety nets. The most vulnerable in Nigeria are being catered for. I'm not saying everybody, but the most vulnerable, those people that if you don't cater for them, they create problems for society. So there's nothing wrong with getting money to take care of those people. But sadly, what we have seen in recent times is that even the money assigned to them, like the Ministry of the Humanitarian Affairs now, the money is likely not being shared in a transparent way, because you cannot independently verify some of the things that they're saying. So everything is written with corruption, and it's completely as useless as, because you cannot guarantee that the money is reaching the most vulnerable amongst us. So the objective is defeated. So I think we need to strike a balance in everything that we do.
Okay, so how do we strike a balance between the two then?
The striking of the balance is, as much as we want to cater for the most vulnerable in Nigeria, we should not just get resources and sometimes even borrow, and then we cannot even account for that. We have to make sure that we have something that is transparent, something that is independently verifiable. If I say there are 10,000, if you come to FCT, there are 10,000 most vulnerable people in the FCT, we should have a register where you know them, you have their biometrics, everything is traceable. And if you say you have given them 100,000 each, anybody can go and confirm whether it's the World Bank or the IMF or an independent researcher. That way we know that this help is actually reaching the people that need it the most. Not somebody coming to claim that he has done something, he's not independently verifiable, you could have used the money to take care of some mistresses somewhere, and you cannot trace it. So we need to work on that. The first thing you do is to get a register, right? And make it digital, have biometrics, before you even start sharing some of these things. Like the rice that the president has been sharing over time is not traceable. And even I think it was in Katsina that the rice trucks were given to Katsina State, and they were repackaging those bags of rice to sell to Niger Republic. So we need to work on, first thing first, we need to suppress our reforms, we need to suppress our policies, because the suppressing is as important as the implementation. If you don't suppress them well, then it may just be an exercise in fertility. You won't have the results you want at the end of the day.
Now, what do you recommend to tackle this debt challenges, especially with borrowing from these international financial organizations?
As much as possible, we should not borrow. Borrowing should be the last resort. And we have different avenues of augmenting income without necessarily increasing the tax rate. There are problems around our tax administration. Fix that problem. Make sure you get the best hands in charge of our taxes or our tax system as a taxman. If you get the best people giving us the best results in terms of administration, going after tax defaulters, going after those people that evade taxes, going after those people that even avoid taxes, because even though avoidance is legal, you want to reduce it to the barest minimum. Not somebody taking advantage of the tax code for loopholes not to pay taxes. So we all need to pay taxes. You cannot run away from taxes because use these taxes to fix our roads, for infrastructure, for healthcare, and for so many other things. So it's very important that we make sure that we run the most efficient and arguably the best tax administration that you can ever have. And then people should see that when they're paying for these taxes, that they can pinpoint to the things that these taxes are being used for. Because if people are not convinced that the money is used well, maybe they suspect that the money is being siphoned, they'll be more reluctant not to pay these taxes. But if they are seeing the results, they'll be more enthusiastic and they can encourage others to do the same thing.
Okay, briefly, in a few words now, could you just share with us the IMF's growth projection? Yes, you have analyzed it very well, but do you think it will affect investor confidence in the Nigerian economy?
Well, the growth rate for this year was reviewed twice, and all of them downwards. And the IMF made mention of two things for that: the agricultural sector and then the oil sector. And the oil sector is around insecurity, and then oil theft and vandalism of oil pipelines and infrastructure. Then for agriculture, you're talking about flooding. So this will definitely reduce investor confidence, but it's not something that is not fixable. If the authorities want it fixed, they will be sure that it is fixed. We need to increase our oil output. We need to increase oil production because our fiscal health largely depends on that. So we need to do everything humanly possible to fix that. And the IMF is cautioning us that in the first half of this year, we didn't do so well. So we cannot afford to maintain that trajectory because we'll be losing investments, not even our inability to attract investments now, but even the little that we have will continue to fly. That's what we call capital flight. We'll continue to see more of it because we have not gotten our act together.
Okay. Thank you very much for this. Just before we round up our program now, let's just look at our continent, especially the sub-Saharan Africa now. The IMF puts the region's growth rate at 4.2%, and this is a downgrade compared to its earlier projection now. So what's the interplay here? The earlier projection was sometime in April 2024, and now Nigeria's own, they've also predicted this. So what's the interplay here in this region, sub-Saharan Africa?
So the IMF attributed this mainly, they are not the only reasons, but the main reasons are the Nigerian economy not doing as well as they expected, particularly because of our oil industry and also the agricultural sector. And then in South Sudan, the economy has contracted by something in the region of a third, almost a third of the economy, between a quarter to a third of the economy has contracted. And then so many economies like the South African economy is struggling to experience growth. So most of these factors have contributed. And if you look at our GDP in real terms, when you adjust for inflation, you realize that the Nigerian economy has actually been on a downward spiral. So some of these factors contributed because we're still part of sub-Saharan Africa. So if some of us, the units are not doing well, then the entire ecosystem also will be affected.
Thank you very much, Dr. Samson G. Simon, for sharing your thoughts on this issue of the IMF's projection on Nigeria's growth rate and also how it affects other countries within the African continent. Many thanks for sharing your insights, and we do hope you can join us again on Market Insights. Thank you.
Thank you for having me.
Money markets this morning, how we're looking at a particular currency, and that's the dollar, how the dollar selling rate has fared from Monday to Friday this week. So the official rate, that's the Central Bank of Nigeria rate, is what we're looking at. So on Monday, the selling rate of the dollar was 1,679 naira, and on Tuesday it reduced to 1,603 naira to $1, and on Wednesday it rose again to 1,633 naira to $1. On Thursday it increased further to 1,676 naira to $1, and on Friday it went down to 1,644 naira to $1. So that's a summary of the selling rate of the dollar. That's the Central Bank of Nigeria's selling rate of the dollar to the naira for this week from Monday to Friday. Many thanks for watching the program Market Insights, and I also want to thank our guest, Dr. Samson G. Simon, the Chief Economist at ARKK Economics, for sharing his insights into this issue of the IMF's projection. And like he advised, we need to improve on our physical infrastructure to ensure that we have continuous production and we are producing things that can boost our economy. Thank you so much for watching the program Market Insights. Do share your comments on all our social media platforms. I am your host, Lovina Emah. Do stay tuned to the news update on Souk News Television.